Hey, what's up, everybody? It is Thursday, July 25th. We had a little pullback in the stock market. Let me talk about that for a second, because today the House passed that 2-year budget debt suspension bill. I jumped the gun a little bit on that when I made that video last week when there was an agreement, but they still have to vote on it, which they did today. The House voted on it and passed it. The Senate, they're going to vote on it next week. That's what Mitch McConnell said. And then the president's going to sign it. And then bond sales will resume. What's interesting, though, is that we are seeing bond yields start to creep back up a little bit today. They hit the 10-year hit 2.08. But as I have been saying, once those bond sales resume, once the Treasury gets the green light to go ahead and start selling bonds, that's it. Bond rally is over. A large portion of the bond rally was caused by this artificial squeeze that was the result of the debt ceiling, right? No new bonds, reserve balances being brought down by the Fed. That's a drain of tier 1 assets that the banks had to replace, and they were buying bonds, but there was a limited supply because no new Treasury sales. Yada, yada, yada. You understand, I explained this a million times already. So now we are still in the period of reserve build, which is a normal headwind for the market. All right, so, I mean, even with today's correction or today's pullback, whatever you want to call it, S&P is still above 3,000. So everything's on track, and we are coming into that window, which is super bullish. I mean, we got the rate cut by the Fed next week. That ought to be interesting, because I think that, there's an 80% probability of a 25 basis point cut based on Fed fund futures, but a lot of people are hoping for a 50 basis point cut. I don't think we're going to get it, and that should be an interesting reaction. Today, ECB, we shorted the euro going into that. There was an initial down move in the euro, then it popped back up on something Draghi said on 45 minutes later in his press conference. Then it slowly just kind of drizzled right back down again. So we caught that. That was on Zombie Trading, by the way, my Forex daily signal service, Zombie Trading. You can go to my website, pitbulleconomics.com, and get that. Next week's going to be a big week. If you're a currency trader, I mean, you got the Bank of Japan on Tuesday, you got the Fed on Wednesday, you got the Bank of England on Thursday, you got the U.S. jobs report on Friday. I mean, it's going to be a big, big week. Big, big week. So we are still in that period of reserve building right now. I mean, the numbers for the week ending yesterday just came out at the Fed's H.4.1 weekly report. See, I give out all this information. This is all public information. I don't try to hide it. Like, have at it. Have at it. Doesn't mean you're going to understand it. You need me to help you with that, but have at it. Daily Treasury statement. I tell people go. And by the way, $99. You could go get my video course, Understanding the Daily Treasury Statement. It's going to be the best $99 you ever spent in your life. I mean, that is the daily checkbook of the U.S. government, where you could see billions, tens of billions, trillions flowing in and out of the banking system, the monetary system, the economy on a daily basis. A daily basis. I always say that's like having inside information. When I was a floor trader, and some of you may not know this because some of you are new as subscribers to my channel, I was a member of 4 exchanges and a floor trader. The New York Futures Exchange, the NYMEX, the COMEX, and the CME in Chicago. All right? For years, I was a floor trader. And one of the things we always used to try to do was get to know the floor brokers. I was an independent trader called a local. That's a person who trades his own account. But the brokers held their book with the orders, and we tried to find out or get close to the brokers with the big order books to know where they would be buying and where they would be selling, because that would push the market. And we were able to jump ahead of that, knowing maybe they had buy stops, maybe they had sell stops, maybe they had big limit orders that could at least temporarily limit the market's movement. You don't need to be a floor trader anymore, folks. If you look at the daily treasury statement and you understand how to interpret that, you're literally looking at what you could call an order book, these flows of billions, tens of billions, hundreds of billions, even trillions on a daily basis. Now you think you can't make money with that information? That the government tomorrow is going to be spending, I don't know, 50 billion on something. It's going to be a 40 billion injection, let's say, of interest payment, or that Social Security is going to be paid tomorrow, or that they're going to sell X amount of bonds, or that they're going to tax as a quarterly tax payment, and that could be 40, 50 billion in one day. I mean, don't think that this does not affect the markets. These things are huge. I don't need to spend $20 million to put my server, my computer, as close as possible to the New York Stock Exchange, like all these crazy algo traders shops. They need to invest and spend millions upon millions to get a fractional little advantage, when I can go to the daily treasury statement, and get information that is way more impactful than that. Way more impactful. And by the way, don't think that the information is only like for a long-term perspective, which is the way I use it, because I'm a macro trader. I use MMT principles. You can't really day trade. MMT is not for day trading. It's for holding a macro position. But you can sometimes, based on that information and knowing what's going to happen. Speaking of macro positions, I've been talking about my gold position that I held for 3 years. We are taking profits up here for reasons that I have explained, maybe not so much in these videos, but I definitely have explained it in my report, MMT Trader. We are taking profits up here. We were buying gold at 1,300, at 1,200, at 1,100. Then back up at 1,200, then back in the 1100s, then just below 1,300, and now it's, it got up to 1,440 a couple of days ago. It's, 1,413 today. Took profits. I had people, that gold position, oh yeah, that's really a good one. All these smart guys, all these very smart guys on here, right? Oh, look at your gold. Like a year and a half ago, whatever. Fine, say it. He who laughs last, laughs best. And I'm definitely getting the last laugh. Oil bounced back up over 56 today. I said that yesterday. I made the video here yesterday. I said it. I said that, it was classic zombie behavior. They saw the drawdown in crude inventories. They rushed in, they bought. Then when it didn't go up, like immediately after that, when it didn't shoot up, they got all frustrated. They sold out. They trampled all over themselves, selling it all the way down to 55, and maybe even dipped under 55. What did I say yesterday? It's going to come right back up. That was a bullish report. All right. So that's it for today. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. Get that information. Get that knowledge. Get that mental game. This is really, really a simple game, trading and investing. It's really all about behavior, folks. But understanding is a key. Understanding is a key. And what we see all the time, all these big shots, all these VSPs, as I like to call them, very serious people, they're more lucky than smart, believe me. And most of the time, they're not even lucky. All right, folks, that's it. See you tomorrow. Bye-bye.